Welcome back, everybody. Let's keep up with the analysis of the gold market. Sive is here with the forexpeacearmy.com as usual. So you can see that actually performance stands very slow. So in the forex market, as we discussed today in the video, it's also mostly we haven't got any changes. All activity stands on intraday charts, and even on intraday charts, it's rather slow. It's because the fundamental background is not changing. Liquidity issues remain. The statistics is postponed due to shutdown, so the ADP report has brought no actually reaction at all. And a similar situation on the gold, although the price shape stands a bit different. So things that we will discuss today mostly relates to intraday performance. So if you trade on a daily chart, then your stance with this attempt of the momentum trade that we discussed, for you it's is nothing changed. So you still have longs against these lows on the entry points that we have discussed in the recent week. So last entry was based on the 322 pattern that we discussed, and since then situation remains the same. You can see it's changing very slow. In fact, we've got inside session recently. On the intraday charts, there's still some nuances exist for those who trade on an intraday basis. Here's different patterns that we discussed. So if you remember, we said yesterday that in general market keeps bullish background for now until these lows are valid. Momentum trade remains intact, but based on the weakness that market could start forming here, and if market will not be able to start upward action, chances on the different pattern also exist. So in this case, it might be the butterfly to the downside. And I said, let's keep watching for possible grabbers. And yesterday, this grabber has been formed. It was right there. So market right now is coming closer, erasing it. As you can see, this upward action is coming above the top of the pattern. But it doesn't mean that the butterfly is not possible. So market even could try to form it until it stands below this top, because this will be invalidation points of the potential downside butterfly, which is also might be intact. Of course, for us, this pattern is not primary, it is secondary and is less desirable, because for us, major trade is of course to the upside, because it's based on the daily momentum setup, it is directional trade, and we prefer to not get any butterflies to the downside here. We prefer to see the upward further continuation. But still, we have to keep in mind this scenario and monitoring the performance here day by day. So signs of the weakness, clear bearish reversal patterns right in this area, it might be the indicator that still market is too weak now and it can't start the upward performance. So other words speaking, just keep an eye on the both sides. So just because the overall performance is so slow and the overall potential bullish ambitions of the markets now limited by some external factors. So that's actually the major reason why we have to deal with all this stuff. On the hourly chart, we see some upward attempt market to move higher. Entry around the 322 pattern was nice. As you can see, market shows the bounce, but at the same time, it's a bit lack of the momentum. It's very slow, gradual performance, too choppy. So here's minor consolidation, this resistance point. What actually I would like to see here, if I wouldn't have any long positions here, is if we do not trade on a daily chart, but we're still thinking about long entry, and we would like to get the confirmation of the performance. What I would like to see, I would like to see kind of the upward continuation back somewhere to the 40-35 area, and maybe a kind of the reverse head and shoulders on top. So if we will get something like this, for example, so this might be kind of the shoulder, market returns right back up to the 40-35, showing the pullback, and in this case it will be possible to think about position taking. In the current situation, when the market just starting upward action, showing no additional bullish patterns except those that we already have used, with this resistance in place, now is trying to break it. So we do not have yet the clear signs of the bullish breakout, something really bullish. And from that standpoint of view, it is not very comfortable to consider new longs. If you have missed the opportunity to take position here, or where we tried to do this on the conference support, if you remember initially, where this was healthy bounce here, currently it's better to wait. Of course, it is not some order, right? So you could do as you would like to, but as more uncertainty you stand and make the position with, as more risk you carry. And the current situation, maybe you will be right. Maybe it just will be some acceleration to the upside. It might be possible, but we do not know that. And since here we have lack of patterns, slow action, too far from the previous lows where you have to place your stop, it's well, it is a question, right? So whether we should take position in the current circumstances, should we take this risk right now or not? Or maybe better to wait for some clarity. Maybe we'll get another pattern. We already have two. It was first 222, right? Pullback. Second 222, pullback. Maybe later we will get another one. Especially if we return back to this subject of this reverse hand shoulders. This will be just great, potentially. By the way, if it will start forming, the right arm will be approximately at the same point where market stands right now, but it will be already absolutely different risk because you will have the pattern almost in place. So that's what we should keep in mind. But as I said, it's also only for those who trade on intraday charts. Those who trade on a daily already have a position with stops below these lows, and it actually makes, well, not important for them. So that was what we have. Think, decide. Maybe you will find some other ways to justify the entry here. But in my opinion, overall context still remains bullish. Gold still has chances to show the proper reaction, but price action is too choppy and mess because of the external factors impact. It just make the pressure and doesn't let them to show the progress, corresponding progress to the pattern that we have. But potentially it might happen, and I prefer to see still some more evident background before taking long position on intraday charts again.